Hello, welcome to my channel. My name is Toni Hogan. I am a Main Street certified tax advisor and enrolled agent, and I am here today to help you navigate the complex world of taxes, specifically when it comes to student athletes and NIL deals. In today's video, we are going to be diving into the fundamentals of NIL income, how it impacts your taxes. So whether you're already earning from your name, image, and likeness, or you're preparing to, this video is going to equip you with the knowledge you need to stay compliant, save on taxes, and set yourself up for long-term financial success. So what we are going to be covering in this video is exactly what NIL income is. You probably already know that, but since we are starting from the basics, we will start from the beginning. We'll talk about how the IRS views different types of income, the tax implications of your earnings, and actionable steps you can take to manage your finances effectively. So grab a notebook and a pen, because this is going to be packed with tons of valuable information. So let's start with the basics. What exactly is NIL income? As you already know, NIL stands for name, image, and likeness, and it refers to your right as an athlete to earn money by leveraging your personal brand. This can include earnings from sponsorships, endorsements, social media promotions, and much more. It could include your own merch, selling your own merchandise. But essentially, if a company pays you to use your name, image, or your likeness in their marketing or with their products, that is considered NIL income. In the past, this was a really big deal because you had so many athletes who were struggling to meet their basic needs, food, clothing, shelter, while these schools were profiting big time off of their talents. Students weren't able to earn money from their name, image, or likeness, or anything else they contributed to a sport, while again the schools were racking in millions, but potentially billions of dollars. But with the recent law changes and regulations, new opportunities have been opened up for you to monetize on your brand. But with those new opportunities comes new responsibilities, specifically when it comes to taxes. So why does understanding your NIL income matter? The main reason is because the IRS treats different types of income in different ways. Not all NIL income is created equally in the eyes of the tax code. So if you don't understand how your income is classified or taxed, you could end up with a bigger tax bill than you expected, or even worse, you can face penalties for underreporting your income. So you don't want to run the risk of paying too much, and you definitely don't want to pay too little. So the first step in staying compliant and minimizing your tax liability is understanding the different types of income and how the IRS views it. So let's break down the main types of income that you might receive through your NIL deals and how they are taxed. First, you have earned income. Earned income is money that people typically receive in exchange for working. So that could be wages or salary. It also includes money that you earn from self-employment income. As a student athlete, earned income that you receive might come from sponsorships, endorsements, appearances, things that we already talked about, merchandise, and the IRS taxes earned income at your ordinary income tax rate, which is based on your taxable income for the year. So you have different types of tax rates, or different tax rates in the tax table, and then you also have different types of taxes. So it's important that you understand that if you're self-employed, meaning that you are earning money from your NIL activities and you're not an employee of a company, then you'll have you'll have to pay what's called self-employment tax. And this basically covers Social Security and Medicare. And I know at this age you're probably not even thinking about that. And us older people, old heads, are always wondering if we're even going to have Social Security available to us when we retire. But regardless, everyone who is earning income from work, self-employment, has to pay into Social Security. This typically will add an additional 15.3% on top of your regular tax rate. When I refer to tax rate, you've probably seen people talk about tax bracket. That's typically the same thing. Then you have your unearned income, and that's going to be things like interest and dividends that you make on investment income. So if you get to the point where you're earning enough money from your NIL earnings, you might want to start investing in stocks, in the stock market, other financial instruments, rental properties. And this is something that we will get into eventually in our more advanced topics on taxes and how to make the most of your NIL earnings. But for right now, we're just talking about the basics. So for your unearned income, it's money that you're not really working for. So any profits or dividends that you might earn off of your investments is considered unearned income. And the tax rate on unearned income can vary, with dividends and capital gains often being taxed at lower rates than your earned income. So, and again, we'll get into that in future videos. I won't get into specific numbers right now. But it is important that you understand the distinctions between these different types of incomes and how they are taxed, because it can significantly impact your overall tax strategy. So, for example, you might be able to reduce your tax liability by investing in assets that generate long-term capital gains, which again are usually taxed at lower rates than your ordinary income or income that you earn from working. Other types of income you might receive might be royalties. So if you license your name, image, or likeness to a company and receive ongoing payments, those payments are considered royalties. So basically, if they put your name on their products, billboards, any type of marketing or advertising, things that you don't have to show up for repeatedly, and you still get payments, you are receiving royalties. And these royalties are taxed as ordinary income, just as if it was you did show up to work for it and earn it. But it can sometimes be classified as passive income, specifically depending on the arrangement, how the arrangement is structured. So you have what's called passive income and active income. Your passive income might be subject to different tax rules, so it's crucial that you understand how your royalties are classified. So, for example, if you're actively involved in managing the business that generates royalties, they're more likely to be considered active income, which is subject to self-employment taxes. If you're not involved, it might be considered passive income, which could be taxed differently. And then we also want to take a look at prizes and awards. If you receive prizes or awards from different types of competitions or events, this money is also taxable. Cash prizes are usually considered earned income, while non-cash prizes are taxed based on their fair market value, or what you might purchase it for if you were to purchase it or sell it. So essentially, if you were to win a car or some other item, you'll owe taxes on the value of that item. Even if you don't sell it, you'll still have to pay taxes on it. So that car is $25,000, you'll pay taxes on $25,000 of that prize that you win. So understanding how prizes and awards are taxed is important because it can help you plan ahead and set aside money for taxes rather than being surprised by a large tax bill later on. Another type of situation where you might have income, or where you want to make sure you distinguish whether you have income, is when you receive gifts. So when you're looking at gifts versus income, you might receive gifts sometimes from your fans, family members, or supporters. I've seen where influencers, and essentially when you start to use your name, image, and likeness, you might be big on social media, become an influencer, and people will want to send you different gifts or different types of merchandise. And just depending on the intentions behind those, it could be classified as a gift, a genuine gift, which is not taxable. Or it could be a situation where a company or someone is sending you merchandise that they want you to promote on your social media. That could be apparel, beauty products, any type of merchandise, or even someone else's brand. They may want you to promote their brand and give you free services related to that brand so that you can promote it. If that is the case, if there's anything expected in return when you receive these items, then that is going to be considered income, and it is going to typically be taxed again at the fair market value of those items. But if it's a genuine gift, there's nothing, no strings attached to it, they don't expect you to give them anything in return, then that could be considered a legitimate gift and it's not taxable. But anything that is taxable, you want to make sure that you're documenting it so that you can accurately report that on your taxes. Now, how do you do that? How do you know what you're reporting on your taxes? Since we have a better understanding of the different types of income, how they are taxed, we're going to talk about the importance of good record keeping. Accurate record keeping is going to be essential for staying compliant with tax laws, maximizing your tax deductions, keeping track of what we just talked about, the fair market value of items that you might win or receive. You want to keep track of all of that in your record keeping. So you do that by making sure you track all income, keep detailed records of the income you receive, any merchandise you receive. You want to keep track of the fair market value of that. So whether it's sponsorships, royalties, anything that has a value, you want to make sure that you're tracking that. You can do that with different types of software, spreadsheet. I recommend having an accountant or bookkeeper, someone who is experienced at tracking your income and expenses, so that you know for certain that you are ready at the end of the year ready to file your taxes at the end of the year. You want to make sure that you're keeping copies of any contracts, invoices, and receipts that you might get. You want to document your expenses. So anything that you are planning to deduct as a business expense, again, you want to keep the receipts or invoices, paid invoices that you receive on those, any type of documentation that will support your deductions. And this includes your travel expenses, any training costs, anything related to your business, because you are now a business and a brand, any marketing expenses that you have. You want to make sure that you're documenting all of those things. You want to definitely make sure that you are using a separate bank account. And like I just said, you are a business, so we're going to talk about making sure your business is set up properly in just a minute. But once that business is set up, you want to make sure that you have a separate bank account. You're not keeping your personal income with your business income. So you want to make sure you have an account for your personal expenses and one to track all of your business income and expenses as well. Again, this is going to ensure that you are accurately reporting your income and expenses, and depending on how your business is set up, it will could keep you out of trouble with the IRS. You want to keep digital copies of your receipts and records in addition to your physical copies. At some point, especially if you're traveling or moving, keeping physical copies of everything can become a hassle, can become tedious. So you want to also make sure that you are keeping digital copies. There are different ways that you can store documents online. Again, if you have a bookkeeper or accountant who's helping you, they should be helping you to set this up, set up a good record keeping system so that you do have these things online. When you keep digital copies, you're able to access them, and then whoever's helping you maintain the books will also be able to access them as well. So you'll be, a lot of our transactions are done online, so you'll receive those documents electronically anyway, but anything that you receive a physical copy of, you want to make sure that you're scanning it and storing it in a safe place online. This helps you to stay organized, and again, make sure that you have copies of everything if you ever need it. So now that we have talked about the different types of income and the importance of record keeping, let's talk about some actionable steps that you can take to manage your NIL income effectively. You want to set up a budget. Create a budget that includes all of your income and expenses. This will help you to keep track of your cash flow and ensure that you are setting aside enough money for taxes. If you already have NIL deals, you can definitely make sure that you include that income, that money that you have. When I work with my clients, I have them set up multiple accounts, and this is going to help you to better manage your income. Make sure that you do have income on an ongoing and monthly basis. You don't have access to, or you're not accessing all of your money and spending it all up front. We want to make sure that that money lasts you long term, that you are using it not just for your current expenses, but you have a plan going forward to start creating wealth. And I'm jumping ahead. We'll talk about, like I said, we'll talk about that in future videos, but I want to put that on your mind now. So when you're setting up your budget, you'll include your current income, your future expected income, and then all of your expenses. If you have not gotten your first NIL deal, you do have expenses now. So you can start with the bare bones of your budget and fill it in with what you expect to make. And this will help you when you're negotiating, because you already know what your expenses are. And then you know what you would like to make beyond your expenses, the money that you would like to have beyond your expenses. So if you start with a budget, a bare bones budget, you can put that income, expected income in there. And then once you have the actual income, you can go back and fill in your budget. Again, a good bookkeeper, accountant, or tax advisor can help you set up a budget and keep track of it, keep it up to date as your NIL income grows. And speaking of that, the next thing we want to talk about is consulting a tax advisor. You want to consider working with a tax advisor who can help you navigate all of the complexities of your NIL income and develop a tax strategy that works for you. So you want to go just beyond just filing a tax return at the end of the year. You want to work proactively throughout the year to make sure that you've taken steps to minimize your tax liability. You're able to keep more of what you earn. And again, you're putting those tax savings to work for you so that you can eventually start looking at creating wealth. A tax advisor can help you identify deductions and credits that you might be eligible for. And then I brought this up briefly before, talking about how your business is set up. You want to, from the very beginning, even if you have not made your first dollar with your NIL, you want to form an LLC. If you are planning to, you expect to get a deal. If you have deals and have not set up your LLC, make sure you set up your LLC now. Make sure you do it with a professional, because there are things beyond just going on the state's website and paying a fee. There are other things that you need to have in place, documents that you need to have in place, people that you need to have in place that are going to be important in your ultimate tax strategy. And once you get to a point where you are making a significant profit, if you already have that LLC set up, then you'll be able to go back and implement a strategy, a layer on top of that LLC that's going to reduce your tax liability. Remember, we talked about self-employment taxes, where there is a strategy that you'll be able to implement that will help you to eliminate that or reduce your tax liability when it comes to those taxes that you're paying into Social Security and Medicare. We can retroactively implement that strategy if you already have your LLC set up. If you have an LLC set up and you did it with an online service, you didn't do it with an accountant or a lawyer that is your lawyer that you paid, you might want to have it reviewed to make sure that everything is set up correctly going forward, so that you don't have any issues going forward. So I went off on a rant, a tangent on that, but it is very important that you have that LLC set up. Now, just an LLC at the very the base level, it does not save you on taxes. It does limit your liability, but again, having that LLC in place already will become, it will be essential in your future tax strategies. So you want to make sure you go ahead and get that set up. You want to plan for estimated taxes. If you're self-employed and you're profitable, you're making a profit in your business, then it's advisable that you pay estimated taxes throughout the year so that you don't have any underpayment penalties when you file your tax return. So you want to make sure you understand how much you owe and when those taxes or tax payments are due in order to avoid those penalties. And a good tax advisor will help you to estimate those taxes throughout the year. And then the last thing you want to do is make sure that you invest in financial education. Take time to educate yourself about personal finance and investing beyond the required financial literacy course or training that you have to take. You want to make sure that you take a deep dive into this or get with build a team around you, tax advisor, an attorney, people who can help you, a financial advisor who can help you understand understand finances better so that you can make smart financial decisions and begin to build long-term wealth. And I probably don't have to mention this, but I'm sure you've seen or your parents have seen stories of professional athletes who earn millions while they are active, But when they get to the end of their career or a few years past the end of their career, they are broke. We don't want to see that happen to you. You're at a very, very great place and a great age where you can start to build wealth right now, and potentially create generational wealth for your children, your children's children, for the people that are in your family. So those are things that you might want to consider as you begin to earn money from your name, image, and likeness, now and even beyond your high school or college career. Okay, and so we're going to wrap up with this. Basically just want to make sure you know that understanding how your NIL income is taxed and taking the right steps to manage your finances is going to be crucial to making sure that you stay compliant and maximize your earnings while minimizing your tax liability. You want to make sure you're keeping good records. Again, consult with a tax advisor so that you can make sure that you are planning ahead. You are using a sound tax strategy to help you to start creating wealth and manage your business. If you do all of these things, you can assure or be assured that you are making the most of your NIL opportunities. If you have any questions or comments, if you found this video helpful, make sure you give me a thumbs up. Subscribe to my channel for more tips on managing your NIL income. And if you have any questions, feel free to drop them below in the comments and I'll answer those questions for you. I am here to help you navigate this new and exciting chapter in your life. As a student athlete, if you want to reach out, you have any questions, you want to get on a quick call with me, you and your parents, to see if there are some things that you need to take a deeper dive into, I'll leave my contact information down below in the description. Thank you for watching, and I'll see you in the next video.